Today's interview is with Prashant Kumar. Prashant talks about how he started out in single families and then soon realized that multifamily was where he wanted to be. And he talks about all the benefits of multifamily, right? Why he prefers multifamily over single families and some of the tax benefits that people don't realize that go along with multifamily. So stick around for all of that. As always, like and subscribe on Wrestling with Real Estate YouTube channel. Go to the WWRE Podcast and give me a 5-star rating and write me a review. It really does help me build this platform and continue to give you guys great content. So please go ahead and do that. And I'm looking to speak to as many of you as possible. If you're interested in real estate in whatever capacity that is, I'd love to get to know you, see if there's any way whatsoever I can help you. So go to the link in the description below or go to wrestlingwithrealestate.com and sign up there. But before all of that, stick around for today's awesome interview with Prashant Kumar. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we have Prashant Kumar joining us. Hey Prashant, how are you doing today, man?
Very good, Barry. Thank you so much for inviting me to your show.
Absolutely. My absolute pleasure. I'm happy we were able to reschedule. Funny story for people. With my schedule, I sent people out a calendar link that they can sign up, and I didn't mark off Christmas Day, and maybe Prashant didn't check, and we were originally scheduled for Christmas Day, right? But then I was had to be like, hey, do you mind if we reschedule? My wife might not be too happy if we do an interview on Christmas Day. So here we are a few days later. I'm excited to get to talk to you, hear your story, and find out so much about you. So thank you so much for making the time.
Sure. No, I'm so delighted that I'm here, and hopefully what I say is making sense for our listeners.
Oh, I'm sure it will. Absolutely, for sure it will. So just to give us an idea before we kind of dive into the conversation, can you give us an idea about what your background is, what you've been up to, and what your current focus is these days?
Yeah. So very, I know. So basically, I come from a very humble background. I came to United States in 1998. Um, I'm a graduate in computer science from a very, one of the good universities. It means that I'm smart by default. I'm just kidding.
No, I believe you.
so so I have consulted with a lot of pharmaceutical companies in life science and industry in their IT divisions, all over the world, managing hundreds and maybe thousands of people on the project, wherever. So I have very strong technology and management background. But one thing I realized, that whatever I'm doing, I'm just trading my time
Mhm.
for money. I have golden handcuffs. I had golden handcuffs because when I did not work, I did not get paid. So that kind of struck me after 20 years of working in the industry, that I have to create something which is residual for me, which is working for me when I'm not working. I'm getting some cash flow out of it. So, long story short, I jumped into real estate single family like everybody else. Everybody thinks that single family is the best asset class, blah, blah, blah. I didn't even know what an asset class word meaning meant at that time. Real estate was buy a house. That's all it meant to me. So I was so naive. So I bought a couple of single families, and I was so pissed off on the lenders, giving a simple $100,000 loan. They would drive me crazy. Where did this check come from? Where would this money go? They would scrutinize like every nickel and dime coming to my accounts. I said, listen, guys, I'm not gonna do this, forever. And the next thing I did was, I bought a multifamily within the same year, and it was such a pleasant experience. Um, I spent maybe maybe 20 minutes giving all my documents to the bank, and I closed the deal in 18 days.
Wow.
So, long story short, I was delighted. I said, man, this is the way to go. But how much money do you have? I mean, you wouldn't have money. You cannot just keep on buying things, right? So then, I kind of stumbled into syndication. And that's how my syndication journey started. That I have to do something which is residual to me, that I'm continuing to buy these assets, but at the same time, I'm helping others also I have investors' money, and I'm using my skills to create value for investors, basically. So my goal is to, help, ultra busy professionals, like doctors, attorneys, you name it, IT professionals. Everybody has a lot of money and they don't know. I mean, they were like, most of them are naive like me. I mean, they think that buying real estate means buying a home
Yeah.
or buying an office space. They don't know that there's something called real estate investing, passive investing, in which they don't give the money to somebody. They actually buy real estate. They become partner of a bigger pie, which is professionally managed, right? So if in the early days, when I would ask somebody, in the syndication, people will say, "Oh no, I don't want to give you the money," and I was like perplexed by that. But I want to educate that to our listeners that when they are investing in a syndication, it is not giving me the money or giving money to a syndicator. You are essentially, instead of you buying a single family home, you are buying a property which is bigger than your single family, and you are part owner of that. So all the benefits of single family home real estate are there in this bigger syndication pot also. You have all the benefits, plus this pot is being managed by real professional, real sincere guys who do it full time, day in and day out, and they are backed up by real attorneys and real bankers who are looking for those deals to work. Banks, I mean, who has the most vested interest in a deal? Lender, right? Because lender has all the money in the deal, 70 to 75%. So lender is making sure that your deal is working out. You have all the SECs looking at the regulations. So that is something which I learned that I need to communicate to my listeners, to those whom I know, that guys, this is being managed professionally. Plus, you are getting fundamentally much more benefits out of a bigger pie because it can potentially reduce your taxes also. A lot of people do not know what does it mean, and maybe we can talk a little bit later. But that's how I started my journey, and that's how I kind of, you know went inside, deep inside, and start educating my folks, my friends, my family members. And then, I started my podcast, webinars, and you name it. We talk to like you are doing, service to everybody. I do similar kind of service in my group also. I try to educate my folks as much as I can, and hopefully, they learn about it. So in a way, it is selfless service to me.
Yeah.
You are doing a selfless service, that you are educating the world. You're putting your time. You are almost ready to talk to me on Christmas Day. so
Yeah.
so look at that, the kind of time that you are putting in, right? in,
Yeah.
in the hope that someday it will come back to you. But even if it doesn't come back, you have no regrets, but because you are doing what you like to do. So that's my journey. I just I took a little extra time, to kind of explain where I'm coming from. That's my journey so far.
Yeah, no, no, I appreciate it. I think it's very interesting and very important that you explain that, right? Because I think, like you said as well, the education part is so important because, unfortunately, like you said, there's so many people that just they don't understand real estate, right? And they don't understand their options as well. More than not understanding real estate, I think they don't understand the options that they have out there, right? They're at their disposal. That's available to pretty much anyone, right? Okay, syndication. A lot of times you have to be accredited investors, but you can also be a sophisticated investor, right? And just have a pre-existing relationship with people. So there are ways to get in, and it's just amazing the options that are out there that people just really don't understand, right? If you're buying, like you said, if you're buying real estate and investing in real estate, you're just buying a single family home, right? With 20% down, and hopefully the tenants don't trash the place, right? That's kind of, for most people, what investing can seem like, right? But that's so far from what the truth is, wouldn't you say?
Yeah. Oh, yeah, 100%. You kind of summarize it right. It is what, people don't know how can they invest? How can they get more benefits out of real estate, not just by investing in single families. They f- so to me, as a naive person, I would think owning a single family home is like I'm proud of owning two homes or five homes. But at the end of the day, if they are not making you money, if they are making your life hell, because you have to manage the tenant, you have to manage the trash, you have to manage the toilets. So at the end of the day, if that is making your life miserable, what it is for what it is worth, I would not like to jump into that. Trust me, once we started multifamily, all my single families are gone. I don't even want to look at them, even if they are cash flowing. I don't even want to talk about them because they were so much stress for me. And with these multifamilies, because I'm managing at a different level, but when I invest as passive investor with somebody else, I don't pick up the phone. I know this guy is performing. I'm looking at the reports every month. That's all I care. As long as reports meet the KPIs, key performances, indicators are met, that's all I care. I mean, my money is growing and I'm getting some return passively. What else do I want? I mean, all I have to do is just keep tab on what is going on. I don't have to worry about it because somebody else is taking the worry. Somebody else is working on it, right? So you have fundamental benefits of appreciation. You have fundamental benefits of cash flow. You have fundamental benefit of depreciation. You are depreciating your assets at a bonus at a faster rate that reduces your taxes, which is not possible in single family. Single family takes 30 years to depreciate to zero. Multifamily, your money is mostly depreciated anywhere from 5 to 7 years. So that's the biggest chunk right there can reduce your taxes. And people do not know about it. Those who don't know, they don't know. I mean, and being a lawyer or an attorney or a businessman, those who have cash sitting around in their bank, that is devaluing. Banks are not giving anything. So with the inflation, our money is getting devaluated every day. So instead of that, put it somewhere. If you don't have time, put it somewhere where it is working for you all the time and it is professionally being managed. So
Yeah.
yeah, I totally agree with you what you said. People do not know their options. They just do not know the options. And your goal and my goal is to teach people, to educate them so that they start trusting us in some ways when they talk to us that these are the subject matter experts, and we give them the advice. I'm sure you're not looking directly for somebody, and I'm not looking directly for somebody in these shows. It will come back to us someday, but I'm not worried about that. I'm here to share my knowledge, which I have acquired and you have acquired. That's what we are doing.
It's the goal is to educate people, right, and just to help people more than anything else. And like you
Yeah.
said there, I like what you say. Well, a few things I like, a lot of stuff you say. For one, I like you, rather than giving your money to a syndicator, you're actually part owner of the deal. You're buying that deal, right? You're not just it's not like the stock market where you give it to someone to manage or whatever like that. You're buying that piece of real estate. Now you're maybe only buying a small portion of it, but you are buying some portion of that real estate, and you are part owner. I like the sound. That sounds. I'm going to use that. I like that a lot because you then become part owner of this large thing, and I think it gives investors more a sense of actually what they're doing, right? And and that's the reality of it, right? That's the truth of the situation. You have a part ownership in this deal until it's either liquidated or refinanced or whatever happens with that deal. So I love that, and I also really like that you explaining in terms of syndication as well, right? We're dealing with more sophisticated property managers. We're dealing with more sophisticated lenders, right? We're dealing with SEC attorneys, right? We're dealing with high caliber professional people, as opposed to when you buy a single family home and you try and get a loan on it. We've all dealt with bad lenders, right? There's good ones out there, but there's plenty of bad ones, and especially in smaller single family, because it's not the sophistication and the complexity isn't that hard, and you can get someone that doesn't really know what they're doing that can get by. You can't have that in a $20 million deal, right? They've got to know what they're doing, right? The same with property manager, right?
Yeah.
I think it's much easier to find a good property manager in 100+ units than to find someone to do a single family home, because they've got to be good. Otherwise, they're not going to be around very long in apartment syndication. So I think that point is such a great point.
Yeah, I mean, and I would just elaborate a little bit more on what I earlier said. When you're buying a $20 million deal, chances are you're going to raise 20 to 30, maybe 25 to 30%, 25 to 30% money from your investors, right? That is the money that you are bringing to the table. And how much is lender putting in the deal? 75%, 70 to 75%. So they're all the interests lender has for the deal to work. Lender doesn't want your deal to go to foreclosure, right? You may screw up, but lender will still try to put all the checks and balances in your deal so that you are forced to perform. You are forced to do your duty. Maybe I'm a bad guy. Maybe I got some 5 million from somewhere and I gave it to you, and or I put it in my deal and lender gave me 14 million. Maybe I'm like screwing it up, but lender is there to hammer me to make sure that I work. I cannot just be lazy and forget about the deal. Lender is there on my behind to make me work and making sure that I work and the deal performs. They're bigger powers than me driving me to make sure that the deal works. Lender, investors, of course, SEC wants to make sure that I'm not monkeying around, and you have the property managers. Otherwise, property man, is their livelihood. They work full time on the property. That's their livelihood. If they screw up, they're out of business, as you said. They won't be around too much. So these are all the right people being put together who are making the deal to work. It is a complicated business, but it's not that it's not done. It has been done many times over and over again. So processes have been oiled enough. They are all streamlined, so to say, and that gives me the sense of confidence that if I invest my money with somebody, would my money be taken care of? I mean, I would sleep okay if I give my money to a professional and he manages my money rather than me buying a single family home and managing the tenant and knowing the tenant is not going to give me the rent next month. Would I sleep? So I may lose my sleep on that, but I don't lose my sleep when I give money to a professional who is managing it professionally. Yes, they are charging me a few bucks, but that's what they deserve. I mean, they work hard. In the end, as an investor, am I getting my money worth? Can I make that kind of money in a single family versus multifamily? If I wait, I have not found a single family investor who would say that he's making more money in single family than multifamily. Passive investing. I've yet to find somebody, because the kind of returns are generated out of multifamily are, annualized are at least 12 to 15%. I'm talking about the lower side,
Mm-hmm.
annualized, five over a 5 year period, 60% to 75% return. That's very, on the lower side of the deal. At least your deal would make that much. Do you make 12% in a single family? I don't think so. You make maybe seven, maybe eight, maybe nine if you are pushing it hard. And all the headaches that you have like tons of headaches, with the single family. So I'm just comparing these things, plus the scalability is so much, you can be part of, you can be anywhere. I mean, the multifamily can be bought anywhere as long as the operator is able to run it. For you, it doesn't matter. I mean, those are my mailbox money. I cut the check once, and all I do is keep collecting my cash flow every month, every quarter. Nothing I have to do. I get a K1, which is negative K1. I write off my initial investment. It doesn't happen with everybody. I mean, it happens with me because I'm a professional real estate investor. But yes, you do get the benefit of it. So they are these are the fundamental benefits in this small conversation. I tried to explain the fundamental benefits of real estate, passive real estate investing in multifamily. And that's what you and I are doing. I think you are doing a marvelous job, and I hope I'm doing something too.
Oh yeah, definitely you are. Yeah, you explain it better than I do for sure. Absolutely. But also what I like as well is all those things that you said. Absolutely right. Is that also someone just starting out, right? Someone who's never done a deal, and you try and buy a single family property yourself, right? Yes, you could be successful, and I have people that have been successful, but there's a lot of risk involved in it, and there's risk involved in everything, right? So I don't want this to stop anyone. But what I like about when you invest in multifamily, so take that same person that is doing his first deal, right? One is doing a syndication and one is doing a single family home. The person doing the syndication is riding the wave of those people that have experience, right? The professionals that have done 3, 4, 5, 6, 7, 8, 9, 10 deals, right? And have all that experience and a
Yeah.
team full of experience as well, right? It's not just the syndicators that have the experience, it's the property managers, it's the lenders, right? It's everyone that's involved, it's the contractors, it's the people that are involved in that deal. Whereas you start out as a single family person, you're starting by yourself a lot of times. So you're starting from zero. You go with a syndication, you're starting at 100, right? You're starting way further because you're using all those people's experiences and the mistakes they've made and the lessons that they've learned through those mistakes. And you can leverage that and start so much further ahead than if you try to start off with a single family. And I think that's brilliant as well. Another reason why I love syndications as well.
Right. I mean, it's just awesome. When I started buying single family, as you said, you start with zero. You literally start with zero. You don't even have a contact of an attorney. Forget about, you don't even have a contact with a realtor. You don't even have contact with a uh, inspector, who would inspect the property. So you are sort of dependent on your realtor who shows you the house. Oh, do you have an attorney? He'll say, yes, I do have an attorney. Maybe he gets a kickback. Then you ask him, do you have an inspector? Yes, he has it. Maybe he gets a kid. You know what I mean? That's how
Yeah.
it starts, right? I mean, if you are brand new, that's how you start. I mean, you call the, hey, listen, I like this home. He'll take you. You you don't even know how to write a let offer. You don't even know what to be written in an offer. There are many people who just don't. They just get frozen. When time comes to write an offer, they just don't know what to write, right? Because they don't know what they don't know. And here, everything is being done handled professionally. Chances of errors, mistakes are so minimal, and you are not responsible. The most important thing is, if I'm investing, I'm not responsible for those things, because somebody else is responsible for that. So I don't need to think about it. I want to know, and I would know. I mean, as the time goes by, but I'm not responsible for taking the decision. Ob- it's not my responsibility, because I'm a limited partner in those deals. I do not have any liability.
Mhm.
Something happens in the multifamily, somebody sues the operator, limited partner does not have any liability there. You know that. I mean, that's the biggest thing. In a single family, your tenant falls, something happens, he's going to sue you, right? In multifamily, something happens, you can wash your hands and walk away, right? So there's no liability on limited partners, as an investor. So that's the most important part. I mean, right there, I can sleep in my nights. I mean, I worry more about my single family. I have, trust me, I have only two single families left, which I'm trying to get rid of for last 1 year. And now these guys are not paying rent, and they don't want to pay rent even if they have money. So I am more stressed out with two freaking two single families than my entire portfolio. You know what I mean?
Yeah.
Because I have more liability there than here. So
Yeah.
I'm just convinced that multifamily is a way to go. Those who want to listen from the experienced, who have been there, done that, trust me, uh, multifamily is much, much better asset class to invest in. That's all I can say. I'm not asking you to invest in, but I'm just sharing my opinion.
Yeah. Yeah. And I think it's, all real estate is great, right? If you're involved in whatever it is. And if it takes investing in single family for you to feel comfortable to start off with, I think it's great. And then maybe you lead to syndication. Maybe you never get there. But I think, knowing, and this, I think the main thing is that people have that option and they understand what's available. And I think that's huge. I think that's just so important for people to understand what's available to them. You touched on it there earlier, and I want to ask you a little bit more about the tax benefits of investing in multifamily real estate, right? And again, neither of us are tax professionals, and unfortunately, we have to say these things these days, right? But neither of us are tax professional. We're not offering any kind of tax advice or counsel to anyone. It's just a conversation between people. This is for educational purposes. So please don't
Yeah.
sue us or anything crazy like that. We're just trying to help, and have a good conversation. So, but talk to us a little bit about the tax benefits
See,
involved.
what see, excuse me. See, what happens is when you buy a single family, right, you depreciate that over 30 years, 30.5 years to be precise. So if you have bought a single family worth, let's say 300,000, you can depreciate that approximately $10,000 per year. And then you can deduct that amount from your, when you file the tax return. Now you are buying a multifamily. Multifamily has, let's say $10 million, let's say $3 million multifamily to make it simple. Let's say you buy $3 million multifamily, but what it is, depreciation is that you are making the value of the asset to zero, right? So single family becomes zero in 30 years. In multifamily, there is something called cost segregation, right? You can, uh, you have like carpet. Which carpet lasts 30 years? Nothing. Carpet you will change like in 5 years, maybe seven. Uh, Appliances, do they ever last 30 years? I mean, your roofs, your sidings, you name it, the whole of the structure. I mean, that nothing lasts 30 years. So there is something called, we do the cost segregation study in which we kind of segregate the component of your multifamily into 5 year depreciation to zero, 7 year depreciation to zero, 15 year depreciation to zero, and 27.5 years depreciation to zero. So we kind of divide into four chunks. And what happens is we put together that, excuse me. So you can, so let's say out of those 3 million, 1 million you have taken the carpet. I mean, it's a whole study. So 1 million, let's say, is there in your 5 year bucket. So you are depreciating that 1 year in over 5 years. Similarly, your bucket, which is 7 year, you're depreciating those components over 7 years, depreciating your 15-year bucket over 15 years. But then there are components called bonus depreciation also. You can take the whole of that and depreciate the whole thing in the first year. So whatever investors invested in that 3 million, in that whatever $3 million, let's say investor invested only 1 million, but your buckets were like 1.5 million. You can depreciate that to zero. So investor got really a K1 with a negative. So somebody invested 100K, he got a negative, let's say negative 50,000 K1. So he has potentially taken a tax advantage of 150,000. Uh, I mean, they are recapture and all that. We are not going into detail of that, but that is when you will exit from the property. But you have taken, or maybe you have taken 70, maybe it's 50,000 only tax benefit in the first year. So that depreciation never dies. Now, can you take that whole thing from your tax return out? That depends on your level of involvement in real estate, whether you are a newbie, or you are a sophisticated, or you are a professional investor. There are three categories in that, and a CPA can explain it better than me. But some of it you can definitely take out in the first year, if not all. Most people can take some, mostly almost 100% of people can take some of that, in this example 50,000, out from their taxes, and remaining will sit there for future. It never dies, that depreciation amount never dies. And those who are like professionals, probably you and I or whatever, they can take that 50,000 in the first year itself. Boom, it's out. You have written it off completely. If you made 50,000 somewhere, you depreciated this basically right away. So your income is zero. So there are ways the taxes are reduced. Again, you and I are not CPAs, we are not giving the tax advice, but that is the fundamental benefit. Beyond The returns that you get out of the higher returns that we talked about, beyond that, this tax depreciation is the fundamental benefit of real estate investing, especially in a bigger asset, not in so much in single family. Single family is a little bit, you cannot appreciate it over 5 years. It is 30 years. That is kind of fixed. But, you know, that's the fundamental advantage. But we cannot predict it. We cannot write it in our underwriting because every investor situation is different. So it is not included in the projected return that we project. We are legally, we legally cannot project that, but it is unspoken truth, and it is a wealth creation. That's how you create the wealth. I mean, I was reading somewhere, U.S. government gives, and don't quote me, $18 trillion worth of tax benefit uh, uh, because of this cost segregation and all, because they want the economy to keep going. So U.S. government gives away so that people keep buying, these economy keeps running. Maybe 18 is not the right number. Maybe it is 17. Maybe it is 16. But don't quote me. It is up to that level that you. This is by law. That's how a lot of people don't pay taxes. I mean, you know whom am I talking about? Everybody knows.
There's a certain person, right, that stands out that people might know, know that doesn't pay any or hardly any real estate taxes
Huh?
because he's invested the right way and he's invested in what the government want you to invest, right? And that's, someone told me a long time ago. I heard they say the government will tell you what they want you to do with your money, right? Just read the tax code, read what the tax code says, and it'll tell you what they want you to do, right? They don't want to build properties for people to live in, right? They don't want to be in charge of housing for people, right? The projects, look at the mess that is, right? That's government housing. They're gone wrong. So what do? They incentivize investors to invest in real estate because that's what they want you to do. So they'll
Yeah.
tell you what to do, and you can take advantage of that, right? It's not doing wrong or anything like that, right? It's completely legal, right? Completely legal to avoid paying taxes if you invest in real estate the right way. And why wouldn't you, right? Like you said, it's wealth creation, right? That taxes is the biggest expense item that we all incur, and why not, if you can limit that and take it out almost of the equation, or what completely, if you can, why not do that, right? You'd be crazy not to.
Yeah. Yeah, no, absolutely. I mean, you said it right. I mean, you hit the nail right on the head that government doesn't tell you, but government puts a tax code in such a way. If you read that, you will understand what government wants you to do. Government will not say go buy multifamily, but government tells you that in the tax code, yes, you are going to get this. These are the tax codes, so you will get so much advantage. So for anybody who can understand that tax code, here you go. That's an opportunity for them to do, and that's how people are making massive amount of money, and still not paying taxes. All legal, absolutely legal. I mean, and for that matter, we are discussing it here, and for that matter only, I have created a 7-day email course, for my friends or family members, or those who want to know a little bit more at depth. If somebody goes to my website, myrealtygains.com, and just give their email address, they will get one email a day, and it would have like 3 minutes, 4 minute video in which I explain what I talk now. Basically, what are the different advantages of investing passively in real estate? So you can become part of that email. We write newsletters, and there's a investors club. And again, we are not asking anybody to invest, but you get a lot of content there to know, continue to read, kind of tells you what are the things in the industry and things like that. So I have created a 7-day newsletter, myrealtygains.com, and there is a place where you just enter your email address. You will start getting one email a day. Um, Unfortunately, you'll see my face there again because I love speaking on camera. I don't write. I love speaking on camera, so I have created that as a video course.
Cool. Yeah, everyone should go check that out. Absolutely. What a great offer. I'll put the link in the description and the show notes below so people can find that there as well.
Yeah.
This is great. This is great. But let's talk about a deal, right? Everyone wants to hear about, hopefully we've educated some people to the massive benefits of investing in multifamily. Let's talk about your first deal. I think that's always a good one, right? Your first ever deal. Where did you buy it? What was the size of it? How did you find it? All that good stuff.
Yeah, so I will tell, okay, I will not talk about my first deal because
Okay.
that I'll keep it for the last.
Okay. Okay.
But I will tell the second deal, let's say, the property that I bought. First one was just a 24 unit apartment complex which I bought for myself. That was simple deal. I found a wholesaler, and that wholesaler happened to be my like friend, like somebody I knew for last 20 years. But I did not know him for 20 years. I had met him 20 years ago,
Hmm.
and he happened to be in real estate. So he wholesaled the deal to me in at the southernmost town of the country, which is Mission, Texas. I bought a 24 unit there, and he put together a deal for me. He had the lender, he had the property manager. All I had to do is cut the check. I spent some time, but I visited that place and I bought it. Like piece of cake. I could swing the knife and it will cut the butter. That's how simple was it.
Wow. Okay.
Basically. That kind of brought me into multifamily. That was my first deal. But then after that, I wanted to buy a similar deal. So for that, I did some marketing, uh, you know, cold calling. I sent some letters, things like that. I bought some data. So I did spend some money to find a deal. And eventually, I bought a deal
Mhm.
after 1 year through that campaign. And that's the best deal. I mean, it's cash flowing for me, to give you the numbers, $10,000 a month, and I don't lift my finger, just working. I have the best property manager. I pay him more than what he deserves, maybe. It costs me a little bit more, but he doesn't call me. I don't need to talk to him. I just need to see the bank account, end of the month. I do talk to him, by the way, but maybe half an hour a month. That's the most ever. I talk to him, maybe half an hour, and I get that $10,000, um, you know, and per month out of it. The best thing, that could happen to me. Simple stuff, right? I mean, yes, I did put my own money, but in the end, it is making me money, right? So, uh, because professionals are managing it. I don't have to be involved. I'm not professional. I was not professional at that time, uh, to that extent. I'm not a professional property manager. What he does, I don't know. I mean, I know, but I can I don't. I'm not skilled to do that. I'm skilled to do other things. So overall, it's working out basically for me. So two deals I talked to you about, ones which I acquired for myself.
And so the second deal, what size deal? How many units was that? And how
The
much did
sec the second deal is a 72 units.
okay.
In Indianapolis. I bought it. Simple, I remain in touch with a. uh, Just hold on for 1 second. Just hold on for. Sorry about that.
No, it's okay.
Yeah, my kids were playing outside. Sorry about that.
Kids will be kids.
Yeah, yeah. So basically, the way it worked out is we did a marketing campaign, and we got 14 calls back out of 2,000.
Okay.
And those 14 calls I kept on following up. There were two, three guys who were very, they wanted to sell. One gentleman, older gentleman, even though I live in New York, he was in Chicago, property was in Indianapolis. He was very interested. So, I said, build the rapport. I mean, I like to build the rapport, with the seller.
Yeah.
So it just so happened that I was going to Chicago the next day and I talked to him. So I dropped by, said hello. Long story short, he was not really ready to sell, but I did go visit the property. I did met him, and we remain in touch for a year, for almost 6 7 months. Every month he will call me, hey, what's going on? I'll say, hey, how are you? I'll just call him to say, to wish him a happy birthday or whatever. And eventually he said that, Prashant, I'm not ready to sell right now, but if I sell, I'll sell it to you. He became such a good friend.
Wow.
And that's what happened. In the middle of nowhere, I was in Alaska, on a cruise, and I got a call. Hey, where are you? I said, I'm away. I'm ready to sell. I said, okay, send me the contract. I'll sign it. So here you go. 4 months later, I bought a property. So it took me a year to buy that, but it was worth remaining in touch with that gentleman. I still call him. I called him like a couple of days ago, and I said, hey Nick, I'm Prashant, I bought this property. He said, why are you calling me? I said, I just wanted to say happy holidays. I said, oh, okay. So, um, so basically, it worked out basically. So building the rapport with the seller, that's what I'm trying to communicate. Building that rapport with the seller. If you build the rapport with 10 sellers, I'm sure one will work out. At least one will work out for you, and that would be enough for your efforts, that you would put in.
Yeah. And so is that how you're finding the larger deals then, the ones that you're doing the syndications with?
No, no, no,
Are
no.
you
Syndication,
brokers?
yeah, syndication is a different business, right? Syndication is, you always do syndication through the brokers. Basically, larger deals are much more professional people. Yes, under 100, yes, somebody can sell it to you, but if it is beyond that, I mean, those who have done uh, those who are in this business, they want to go through the broker because broker brings the best price for the property. Can you find bigger deals? Maybe you can, but I have not found one yet. So I will not advise you to spend time there. Uh, Syndication deals are always through brokers, because they are always 100 plus, 200 plus units. Um, and, and that doesn't come through regular channels. It comes directly through broker relationships. Your relationship with the broker's thought process that yes, you are able to close. You have to convince the broker somehow that yes, you are the person who could close this deal. And when you show the portfolio, you talk to the broker in that language. Broker, it's like, instead of broker taking your interview, you start taking broker's interview. Then broker will understand, oh, that he's talking to somebody, somebody bigger than him.
Yeah.
And then he start trusting a little bit more. And that's just my way of doing it. When I talk to the new broker, I talk to him slightly differently, rather than allowing him to interview me. I start interviewing him. So that kind of gives a different feeling. That's just how I do it.
Yeah. Which market I know you bought for yourself in Chicago. You said in Chicago and in Indianapolis. You're in Long Island yourself, right?
Yeah, I'm in Long Island, but my properties are in Atlanta, Huntsville, Alabama, Houston, and Indianapolis. Yeah, these are the 4 or 5 markets. That's where I am in right now. But I'm open to expanding. We are open to expanding to other areas also, like Oklahoma City, other parts of the Texas, or Indianapolis is another place where, of course, I want to grow. So these are the ones which I'm focusing on.
Mm. And you said we there. Who's part of your team, Mira? I'm guessing you're not doing
So
this all yourself.
yeah, in this business, it's a team business, right? You have seen it. Um, Even though I am, I'm the president or whatever of my company, but I have partners to do. I mean, my team has, employees, of course. Plus, you have partners. You have boots on the ground. Every place, you have boots on the ground. You have built a lot of relationships. Sometimes you have multiple deals going on, so you need somebody to help you with the work. It's too much work. So just few other people with me, and depending upon the need, other people come in and go. Some are more permanent than others, but always they're looking for more, better partnerships, better relationships. That's the key in this business. You cannot turn anybody away here in this business. When anybody wants to come in, they are always welcome to do whatever they want to do, because it's just too much work, too many things to do, all the time.
There's always plenty of room on the bus, right, for everyone who wants to be part of the team,
Always, always. My bus is always empty. There are always few seats empty.
right? That's great. That's great. Well, this has been really interesting, and I think you know you explain it so well, and the benefits of multifamily and how it works and why it's such a great investment, right? There's no doubt about it. I think, like you said, if you can at worst get a 12 to 15% annualized average return, right, and then you add in some tax benefits on top of that, right? If that's the worst you can do, right, I think you're doing pretty well, right? I think that's, in reality, you're talking 15, 18, maybe 20% average annual return,
And,
along with the tax benefits. Still, it's just
and I can I
amazing.
can I can close my eyes and say the number. It will, it is much more than 20, 25, 30%. I don't want to say it. There's no need to say it. I mean, because that would mean that we are trying to lure somebody. So, it is definitely much more than that.
Yeah, exactly. Yeah. And the problem is, as well, people find it hard to believe that that's even possible, right? So that's
Yeah,
it's too good to be true sometimes when the people, that's what people think. Yeah.
yeah,
Well,
yeah.
great. Well, thank you so much for sharing. It's been a really fascinating interview. I really appreciate it. But as this show is called Wrestling with Real Estate, I always like to ask some wrestling related real estate questions. So the
Yeah.
first one is, what would your wrestling name be? If you picked a wrestling name for yourself, what would it be, you think?
I think Mr. Persistent is the right name. I'm always persistent. I'm not quitting. I'm there for the long haul.
Mr. Persistent. I like that. I like that. So every wrestler has a special move, right? It's their biggest strength. It's what they're really good at. So what is your special move in real estate? What is your biggest strength, you think?
I think, and that's how this is what has attributed to my growth is never say no. Never say no in the first instance. I always keep on looking at the deal until nth degree, or somebody asks me to do something. I keep on finding something for, not for myself, just keep on analyzing it. What are they offering? And 99.9% I find something for it, something for me in it. So when you say no, you have shut down the doors. You have shut the doors in front of you. So that's my um, probably mantra of my growth. I try not to say no to the opportunities that come.
Yeah, that's great. I like that a lot. And it's, like you said, once you say no, you close the door, right? It's done. That decision's made. But if you try and figure out how can I make this work, right? Well,
Yeah,
there's a good chance you might make it work, but even not, you're opening that mind, and something else might come because of that, right? If you just open your mind, you have so much more possibilities where no only means one thing, right? No leads you to one thing only. Yeah, that's great.
yeah,
I like that. I like that a lot. What's been the
yeah.
biggest body slam you've taken in your real estate investing career?
So one deal which I did not talk about, the first deal on which we worked for 6 months, is a 500 unit deal, and it was 60% occupied, 35% down, 50% economic occupancy. We worked on it so hard, so hard. We were retraded by lenders 3 times. We were retraded by property managers 3 times. I talked to so many property managers. I talked to so many lenders. I talked to um, so many, inspection companies, insurance agents. You name it. Whatever is involved, I did. We did. 6 months we worked on it, um, and the night before we were retraded by our private equity partner. So that is something very shocking for us. The best part of it that we did not lose our shirt, because he gave us. I had my personal money in my first deal. I would not be here if that deal had gone south. I had maybe 300,000, 400,000 hard, and there was nothing left. I mean, after a couple of hours, it was all gone because there was no extension left, no nothing left. Uh, the good part for our equity partner, he said, "I'll give you if you give me the deal, I will give you the money that you have invested in." So I mean, we had no option. I had to give the deal to them. He gave us the money. We made a little bit of money too. That is his good part. I have to commend him for that. That he gave us 1% of purchase price as our fees. Uh, but that was nothing, of course. That was not something which I would have given the deal for. Uh, So we made some money, we gained a lot of experience. The bad part is we did not have the deal. Um, and this is 6 months worth of work. Everything was like on a silver platter. We gave it to him. Most difficult deal in
Oh
the
wow.
world. We gave it to him for a few bucks. Uh, but we couldn't sleep for a couple of days after that. Uh, or you can say that we slept well after.
Right,
Yeah,
yeah, yeah.
it was off our shoulders. So yeah, it was the biggest blow in our. But because of that experience, I was able to find two deals in the next couple of months of similar size because we had talked to so many people, we had met so many people, we had developed that confidence, and we were able to find new deals. So all in all, it worked out in our favor. You know,
Yeah, yeah. I hear that time and time again with people that things go wrong, but it leads them to more success, right? Because, like you said, that disappointment can lead to other things, right? And it's like you just got to keep going, right? And by keep going, you'll find other successes. So yeah, that's I think. Unfortunately, it didn't work out on that deal, but ultimately it worked out, right? In the grand scheme of things.
oh yeah, 100%. I mean, so I have no complaints.
Yeah,
Actually, I'm actually grateful that it happened to us. Maybe it was not meant for us. Maybe it was too difficult for us to begin with anyway.
yeah,
Maybe we wouldn't have done it. I mean, it's so difficult deal. So I mean, maybe more experienced guys were the right person to do it. So
yeah.
so overall, yeah. I mean, I look at the positive side.
Well, for sure, you've got to, right? You've absolutely got to. So, was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it, and how did you overcome it?
See, like that 72 units, I bought it from my own money, right? I mean, that was the biggest purchase. I would have done it as an individual. You are buying something. I mean, before that, you had bought like maybe home or whatever, 500,000. That's the maximum purchase that you would do spending your own money, right?
Yeah,
Five, 600,000. But here you go, you are buying a 72 unit apartment complex, and 25-30% of that is, five, six, 700,000. You're putting your own hard cash because you are buying. Uh, so yeah, I mean, even though it was a year, it took me a year to buy that. But when the time comes to buy that money, where I was thinking, what the heck am I doing? Is it the right thing? I mean, you always have the cold feet. I mean, it took 20 years to earn that kind of money, and now you are suddenly putting. So, uh, yeah, that time I felt a little upset. Not upset, but a little nervous, so to say. But the fact that the real estate is not going anywhere, right? The fact that the building will always be there. Maybe I will lose few bucks here and there, but it is a cash flowing assets. I was confident about my ability to run it. So I convinced, I said, listen, I'm gonna buy it. I'm gonna just do it. So I said, I'm not gonna think about how much, whatever big check it is. It was a big check at that time, maybe not now, whatever. But I said, listen, I'm going to cut the check. I have to take this risk. Maybe I'll lose maybe 100,000 out of it. So what? What? I mean, is it going to make me, am I going to be poor? Nobody's going to take away that real estate. That's the fundamental advantage of real estate. When you are spending money, that money sits there. You're building. Have you ever seen somebody taking your home away? It doesn't happen, right? They don't move. Like you go away for the weekend, come back, your home will always be there, right? 30 years, 40 years later, also your property will be there, right? The ownership may change, whatever. So my real estate will have the value. That's what came to me, and I said, listen, I'm going to buy it, and I bought it. So that's how it went. I think,
now you
yeah.
now you're very happy that you did, right?
Oh yeah, 100%. As I said, I don't even lift the finger. I just check my bank account. That's all. You know, I don't have to talk to my manager if I don't want to in a month. Like this month, I did not talk to him at all. That's it. Everything is on auto. I mean, his salary is auto payment. He puts in, he sends the text that I deposit this much money. That's all. I don't need to talk to him because he knows that he's getting his time's worth, and my property is running well. So that's how
That's
it
what
is.
you want, right? Mailbox money, right? That bank, that money hitting the bank every month, and you're
Yeah,
not having to do anything with it, right? That's perfect.
yeah. It is mailbox money to me. Really.
Perfect, perfect. Well, Prashant, thank you so much for sharing everything that you've shared today. It's been a really fun interview, and really, really enjoyed all the information that you shared. And I'm a big advocate of multifamily. It's a great investment class. I love it a lot. I think it's brilliant. But before we can end this interview, do you want to give people an idea where they can reach out to you, get in touch with you, find out more about what's going on with you, and also plug that 7-day email course again as well, please?
Yeah, 100%. Yeah. So yes, you can reach out to me. My name Prashant at My Realty Gains. You see at the back of my the logo, Prashant at myrealtygains.com.
Perfect.
Send you send me an email, I will always respond. I will not ignore. I do not have a single mail in my mailbox which I have not read or responded. I always respond, maybe a day late. If you want to know more about me, I have multiple websites. One is purely to educate investors. MyRealtyGains.com is the education website in which you put your email address. You go to that website, you put your email address, you get 7 emails on 7 consecutive days, which will tell you fundamental benefits of real estate investing. Besides that, if you really want to know what I have done in the world, in multifamily world, the name of the website is Multifamily Realty Gains. Instead of my, it is multifamilyrealtygains.com. That is my bio, so to say, in multifamily world. Multifamilyrealtygains.com. My cell phone is 631-428-6479. 631-428-6479. You can look me up on the LinkedIn, Facebook, Prashant at My Realty Gains. You will find me everywhere. Trust me, I'm very active. I'm not my marketing team is very active on these platforms, so you will find me definitely.
Perfect, perfect. Well, thank you so much for sharing that. Appreciate you being on the show. Appreciate you sharing everything that you shared, like I said, and really enjoyed today's conversation, man. Thank you so much. Have a great rest of your day.
Barry, thank you so much. I'm honored that you invited me on your show. It's the first time ever I'm talking to a WWE wrestler. Never talk to anybody. Never. I've seen, gone to the shows and stuff, but never talked to anybody. I'm so glad that I'm talking to you, and you are in multifamily business. I'm pretty sure you will do well, and I hope that maybe we can do something together in future too.
Absolutely, absolutely. Thank you so much. The pleasure was all mine. Thank you so much.